another episode of Millennial Money Matters with Kelly Turner.
And Derek Mazzarella.
And it's just the two of us today.
Just the two of us. Justin actually had his baby last week. I don't think I told you.
Yay!
Yeah, so our producer Justin just had his second child. So, yep.
All right, I love it. And we are deep in the recording episodes right before they come out season of the podcast. That always happens to us, and it is because it is summer.
Yep.
And we are both working very hectic. We were actually talking summer camp before this started. Like, I will tell you, for those millennials and Gen Zers who do not have kids yet, you think picking a daycare is hard. You think nothing is harder than the summer camp Hunger Games.
Well, because I think the best part is that they never line up with the school schedule. There's always like a week before or after that doesn't quite fit. So you got to figure that out. And then, it's like there's a million moms just like last second. All right, 8 a.m. I got to be on.
Yeah, and a lot of them are like 2 weeks, but one camp, the 2 week sessions are off from another camp's 2 week session. So you like have 1 week here and 1 week here, but now you got to pay for 4 weeks when you're only really getting 2 weeks. It's insane. And I just figured out my children's like last week before school starts today. Good. When summer's already started.
Yeah, we have to figure that out. And honestly, that's mostly my wife, so God bless her. She does a great job. She doesn't even listen to this, but you do an awesome job, Nicole.
Great job. What's the like Hunger Games symbol that you give? Yeah, I'm right there with you.
Yeah.
I'm right there with you. So we're talking about something today that is a topic that comes up for me a lot, but we've talked about it generally in the podcast, some mentions of this topic, but we've never really gotten into it, and it is condos.
Condos. I've got one of those things.
I do too.
Nice, look at us.
Yeah, and I think, it's funny because we talk about home buying a lot. We've done tons of episodes on, homes as investments, how to get into the housing market, all this stuff, but we've never really talked about condos specifically. And this sort of came up for me as I have a client who is kind of waffling between a condo and a single family home. And I was going over the pros and cons with her of a condo. And I sort of thought, like, how many people don't really understand like what a condo is and what it means for you as a home buyer and what things to kind of look out for? So that's
I think we go over it. Yeah, I think that's a great idea. There's some little mystery around it. Like, people have probably heard some stories about HOAs or I don't know, I would never live with that or blah, 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 control. So we can get all that stuff and what the pros and cons are and why you maybe would and why you wouldn't.
Yeah, and I think that's exactly it. The HOA tends to be the big mystery. Nobody's going to tell me what I can do and not do in my house. And Connecticut is unique. So for those of you listening, in a lot of the country, regular single-family homes live in big HOAs. HOA is a homeowners association. So that is very common outside of Connecticut, that your normal single-family home in a neighborhood is a part of an HOA. That is not super common in Connecticut. So HOAs tend to be condos, townhouse complexes, sometimes PUDs, which are called planned unit developments, and then 55 and older communities. And that's really it. Your average single family home is not going to be in an HOA here. So HOAs really generally only come up for condos.
Yeah, that's what I've seen. Because I have clients that moved to Florida. I have friends that live there, and it's like every house seems like it's in a condo.
Yep. Yeah.
An association.
In an association. So why would somebody choose a condo over a single family home? So first thing is price.
Yeah, they're much cheaper.
So condos tend to be 10 to 20% less expensive per square foot than equivalent single family home. That's a big difference now.
That's a meaningful difference, yeah.
Yeah, and I think the other big attraction for condos is the ease of ownership. Making air quotes here for those of you who are only listening. The ease of ownership. You don't need to find a plow driver, a landscaper, groundskeeper for your plants. You don't need to do those things. They're sort of all taken care of by the HOA.
Yeah, you want to think walls in is your responsibility. Walls out is the condo association's responsibility.
Exactly. So what are the pros? Okay, and I'm going to list a pro. You own a condo, I own a condo. Tell me if you actually think this is a pro or not.
Let's do it.
So first one is lower purchase price.
Yep.
Was that true for you?
Yeah, because so my condo's in Boston. It's a triple decker. Just to give some context, there's only 3 condo units in this one triple decker, so it's not like some big apartment complex that I bought. In South Boston, like there's no houses. Like you don't buy a house. We weren't really looking for one at that time. But I would imagine it would be cheaper than buying an actual house in South Boston. So it'd probably be like $20 million.
Yeah, right. It'd be a lot. So less maintenance, another pro. So again, roof, lawn, snow, all handled by an HOA.
Absolutely. I never mowed a lawn when I was living in a condo because we didn't have one.
You didn't have one. Yeah. Didn't have one. Yeah. And I would agree with that. For the condo that I have, we don't even, and in my condos in Vermont, where like snow removal is expensive and very, very important, we never ever worry about any of those things.
Well, the nice thing about that is you're dividing the cost of that experience with a bunch of other folks too.
Yeah. And for the landscaper or the snow removal people, right, they can hit one spot and blow it all out in one shot. So they are going to give you a discount for it anyway.
Right. Yeah. So there's economies of scale there for sure.
Amenities. So a lot of condos have things like pools, gyms, clubhouses, sometimes golf courses, restaurants. So they can have more amenities than a traditional home.
Elevators even, I've seen.
Yep. Elevators. Mine doesn't have any of those. Yours, I don't think has any of those.
No.
But if you're
Spare bones.
in your, maybe you're again in your 20s, early 30s, you really want a pool, but a home with a pool is out of reach. A condo with a beautiful pool might be in reach.
Correct.
Homeowners insurance is cheaper.
Yeah. Well, because like I said, you're only paying for walls in.
Yep. It's called an HO6 policy. So as long as the condo complex is properly insured, and that's a mortgage piece that we will talk about, as long as the condo complex is properly insured to Fannie Mae, Freddie Mac, or FHA minimum standards, you just need an HO6 policy, which is kind of like a beefy renter's policy. That's how I describe it to people. It's like a beefy renter's policy.
Yeah. The main thing there is really mainly like liability coverage. If something happens in your home, in your condo, you're covered.
Exactly.
The big part of it.
And then the last pro is it is very equivalent to a rental, but you're going to build equity in it instead of building somebody else's equity.
Correct. The only thing that does not give equity, and this must be very clear, the HOA cost is not going to drive equity. So when you're ever evaluating buying a condo and you're saying, oh, wow, my mortgage payment's only going to be $1,500, but then your HOA fee is $600, that $600 is not building any equity for you.
Correct. Absolutely. Now, I do tell people all the time that HOAs, right, that is money for a service. That's what an HOA is. It's money for a service. It's not money you're flushing down the toilet, but it is something to take in consideration. What those costs
is it
are.
like worth breaking down a little bit with like what typically goes in an HOA?
We're going to get into that.
Okay, look at you. All
we're
right.
going to get in. I've got that listed
Look at
here.
you. All right.
So what are the cons? The HOA fee. Okay. That's probably the biggest con. HOA fees can be $100 a month. They can be $500 a month. They can be $1,000 a month.
Well, especially you're talking about a pool, an elevator.
Yeah. I have a borrower who bought a high-rise condo in Florida, and their HOA is $2,000 a month.
That's insane.
Yep. Now, multi-million-dollar property. All the condos are multi-million dollars. They've got 3 pools, a beach. Like, there's a lot going on. So it's worth it.
I might pay a couple of grand to have a beach right next to me.
Yeah, it's worth it, but it is something to take in consideration. And what's hard from the mortgage side is that, like, well, I can give you, hey, your top end sale price is X amount for a single family home. For a condo, well, it's X amount if the HOA is this amount. It's Y amount if the HOA is this amount. So it can change a little bit. HOA rules, another con. Pets, rentals, renovation, parking.
Yeah, you can only have a dog 30 pounds or less. You can only have 2 bushes that are the same color. You can only paint your house this color to this color, right? Like they can have a lot of weird.
And some of it is you can't, if you're looking at this as an investment, some of them you can't make as a short-term rental or an Airbnb. Some of them you can only have long-term renter. Some of them you can't rent it out until you've lived in it as a primary for a year. Parking, some have dedicated parking. Some you might only get 1 parking spot. Some have no parking.
Or limited guest parking, things like that too,
limited. Yeah, like a lot of times condos in more urban areas may not come with parking. You have to purchase the parking separately. That's not uncommon. So parking is not a guaranteed. Where in your single family home, you could park on your front lawn if you want. No one can stop you. You own it.
And I do. No.
Yeah. And then the last one is kind of the less privacy. That is definitely a con for some people, is that much like apartment living, depending on the setup of your condo, you may have somebody living above you or living below you. You may have to be quieter. You could be sharing walls. There could be someone right next door. So there is definitely less privacy involved than in a single family.
Well, I'm going to throw one more in there, and you may have it later, but special assessments.
Oh, don't worry. We're going to have that. But tell people what is a special assessment.
Okay, so let's say you have your monthly fee, and it generally covers like the normal stuff, the normal maintenance things. But then they say, ooh, the fence we have is rotting. We need to replace that. Boom. You guys all need to kick in, $2,000, $5,000, $20,000.
Yeah.
So it's like an additional fee on top of the HOA fee to cover maintenance typically, or like a big project that's going on.
Yeah. And the hope is, so we're going to talk a little bit about some changes in how HOAs run, property management, all of that, and how that may impact you. So for those of you who don't know, in 2021, there was it's called the Surfside collapse. It was in Surfside, Florida. So the Champlain Towers South collapsed. It was a large condo complex. They lost 98 lives. It is considered one of the largest like housing tragedies in modern history. That had a humongous impact on lending for condos, because you also have to think, not only was this a terrible thing for all the owners, each of those condos most likely had a mortgage on it.
Yep.
Okay. And what do you do when the asset is gone? Right. And that is what happened here. The whole entire asset is gone. So if you were a bank that had multiple units in there, you could have been out millions upon millions of dollars. And then what came out of it is it's not just about the dollars, but it becomes could we have prevented this?
Always. And they're never going to react like Smalley. They're all going to go like the exact extreme end.
Correct. So why does that matter for a mortgage? So what people don't realize with a condo is when you are purchasing a condo, there is actually two things getting approved. Okay. When you're buying a single family home, you, the borrower, are who's getting approved. When you're buying a condo, you, the borrower, is getting approved, and the condo complex is getting approved. What do I mean by that? So when you are purchasing a condo, the mortgage company is going to request a resale package, a condo questionnaire, sometimes the budgets, sometimes meeting minutes. They ask for a lot of information. And why do we care about that? We want to make sure that that condo complex has reserves. We kind of keep mentioning that. So what are reserves? When your HOA fee is collected, it's divvied up into a bunch of categories: insurance, snow removal, all these different things. Well, one of the categories has to be reserves. It's usually 20% is what people are looking for.
Yep.
And it is a chunk of money that is just being set aside. And that is for maintenance. Okay. That is for those things that sometimes become special assessments.
Right.
Hey, we need a new roof. Hey, we have to repave. Hey, the pool needs to be redone. That way they're not special assessing all of these things. What they found with something like Surfside is that they were under reserved. And they knew they had structural issues in the building. But the condo owners, the units, would not vote to raise the HOA fee in order to help cover some of these. And this sort of became a big issue of, well, how do you maintain this, right? How do you make sure that, the power of the unit owners isn't overtaking like structural integrity of a building?
Yeah, I mean, that's a hard place to be in, because you think you've got these votes that happen, and okay, now it's getting more expensive for us to live there. Like, I don't want to do that, which is very natural, like to not want to pay more. But the other side of the coin is people like, look, I'm trying to sell my condo in like 2 months, so like I don't want these HOA fees to be higher.
100%.
Yeah.
100%. And when you buy it, your condo at a $250 HOA, and 6 years later it's at a $400 HOA, you didn't necessarily budget for that. Right. You didn't necessarily budget for that. Now, the other things that they're looking at more than they ever were before are insurance. So the insurance requirements for condos have gone up significantly since Surfside. So what a condo complex has to maintain for insurance is much higher. We care more about owner occupancy as well than we ever have before. So say there is a complex that has 100 units and 50 of them are owned by investors. That's a little bit of a risk for additional people coming in, because if investors start to go bust, this can leave an HOA belly up, right? We don't have enough money to continue. Delinquency rates of HOA payment. So if, again, a complex has 100 units and 75 people have been delinquent on their HOA fees, again, this puts the whole complex at risk because we are not funding our budget appropriately. And then really maintenance. Okay. And that's where those condo meeting minutes come into play, where lenders are asking for those a lot. Is we want to see, hey, are you guys discussing maintenance issues? What are they? How long has this maintenance issue been on your minutes and nobody's done anything about it? So that stuff is really coming into play. And then the last thing is litigation. And people don't realize this. Condo complexes are sued a lot.
Interesting. I didn't know that.
Yep. And you have to think is, some of these complexes are large. Somebody slips on the pool deck and gets hurt. Somebody, stubs a toe on the sidewalk. Somebody gets bit by a dog. Or sometimes it's things like, hey, the builder who built the condo complex messed up the plumbing and 10 units have banded together and they are suing the builder. The mortgage company is going to request everything to do with any pending litigation on a condo complex. And you might think like, well, how often is that, Kelly? Truthfully, more often than you think.
I'm sure. Yeah. So just pay cash with everything, right? That's the problem.
Yeah, that's it. Just pay cash for it. So this has really come into play. Now, one of the things right now in 2026, we actually just had a large change in these rules. So post Surfside, we saw an immediate reaction. We saw a bunch of stuff change. Well, we just had, now that they've had a little bit of time since then to see how these changes have impacted things. If you guys are following the news, especially in Florida, a lot of these condo complexes, a few of them have been actually deemed inhabitable, where they've
Yeah,
evicted everybody out
Yep.
because it's stuff that had been around for a while, but Surfside makes it feel that much more dangerous. So there's been a lot going on. So what has happened since then? Well, there is a much greater focus starting right now on reserve funding and reserve studies, making sure that historically we've had enough in reserve. What have we done with the reserves? Are they being used appropriately? Way greater insurance scrutiny. Okay.
Sure, yeah.
We have, per the new changes for Fannie and Freddie for 2026, we've gone way up in looking at insurance. We need a lot more documentation from the HOAs. Limited review. So we used to have this thing called limited review, where if you were putting a really big down payment down, we didn't have to do a full condo review. We could do a limited review. Those are going away in a lot of cases. And then structural safety and deferred maintenance. That is the number one focus. Okay. So what does that mean for you as a buyer is that it is not as simple as me saying, yeah, you can buy that condo, you're approved.
Right. Oh, great place. You can afford it.
Yeah.
Looks
great.
awesome. Yeah. We got to dig deeper.
And we won't really know any of that until you're already under contract.
Bummer.
Yeah. You cannot do the work ahead of time.
This is where, this is probably where like these companies should be like, you need to put this in part of the offer and all that, like other stuff. It should be disclosed. All like, I don't know. I feel like this should be an upfront thing versus now we got to tie up everyone's money for 2 months to investigate this.
Yeah. I don't necessarily disagree. It's unfortunately just not how it goes. Now, the only time it does go that way. So I'm mostly talking conventional loans right now.
Yeah.
So FHA loans, Federal Housing Administration loans, HUD loans, those have always been stricter for condos. So for a condo complex, they have to be FHA approved in order for you to get an FHA loan on them. So the condo complex ahead of time has to do all this paperwork and submit it to HUD, and then they're approved. And once they're approved, for the most part, the lender can lend on that.
Oh, okay.
We sort of know that it's already been done. Now, where is that tricky? Well, number one, there's not a ton of complexes that are FHA approved. It is a laborious process for the HOA to go through. It costs them money. They can sometimes submit, get rejected, have to go back. And a lot of them just say, nah, we're good.
Yeah.
So while it's great in theory, it doesn't work that well. Now, Fannie and Freddie are also working towards these sort of approved lists. You can still buy a complex not on approved list. It just has to go through, again, a bigger scrutiny. If they're already on an approved list, usually we kind of know that it's going to work and it can get through. But it is just something for people to take into consideration that from the lending side, I can't just say, yeah, this fits your budget, go buy that condo.
Right.
There's stuff that you have to think about.
Yeah. Some more extra hoops to jump through. But so is there a way as a buyer, can you go in there and request some of that stuff prior to, or is that like only like, hey, we're only going to disclose this after the offers?
It's really only disclosed after the offer is accepted. So once you have your offer accepted, the seller of the unit is going to request what is called the condo resale package. They do not do it until they're under contract because they have to put your information in. It usually takes a week or so. And then you, as the buyer, the seller, your agents, and the lender get a packet of the resale package. It's something that is prepared usually by the property management company that has, again, all of this data that we're looking for in it. Where those can get tricky is some complexes are managed by big property management companies. They have like a central location that is providing these. They are well done with all the right information on them. Some properties are managed by small property management companies.
We have 3 people.
Yeah, and those might not be as easy to get, as thorough. And then some condo complexes are what we call self-managed, which might be you.
This is definitely us, yeah.
Yep, where there is no outside third party that is being paid to manage this unit. You, the people who own the units, are getting the plow guy. They're getting the landscaper. They're collecting the HOA fees themselves. They're depositing them in a bank. That is self-managed, and those can be actually the trickiest.
I'm sure, because it's hard to have records. You don't I run our condo association now, and I can tell you the whole story why if you want to listen. But yeah, I've never been asked like, hey, you need to put together this, and this. I mean, I have the insurance, we have the bank accounts, I can show anything I need to.
But you don't even know what you might need to show.
I have no idea what we need to show. No clue.
And not only that, but like you're a guy with a job.
Yeah, I have a jobby job. Yeah, one of those things.
So somebody's going to ask you for this and you're gonna be like, I don't have time tonight. I don't have time tomorrow. And this could be a week or two and you've got somebody with a mortgage contingency ticking down.
Clock is ticking. Yeah,
exactly. And is this the biggest priority in your life?
Nope.
So how did you become the president of an HOA?
Okay. So we have a 3 triple decker in Boston, and I bought the unit. The person that I bought it from was the condo quote unquote president, right? They were managing everything. So I went to the second floor person. I figured, all right, well, she lives here. Makes sense. Run with it. We had about $3,000 in our reserves. So not bad, but we don't have a lot of stuff. And our HOA fee was $200. It's still $200 a month. I kept sending her checks. I'm like, these are never getting cashed. Like, what is the story with this? So one time I was like, hey, are you getting my check? She goes, yeah. I go, okay. Like, I know she's not, are they being cashed? She's like, oh yeah, it's fine. Everything's fine. And then like a year and a half goes by. And finally I'm like, can we have a condo meeting with everyone? And she goes, yeah, I really haven't been cashing those checks. I was like, what? So everything was on auto pay. And then everything just essentially ran out. All the reserves ran out at one point. And then I was like, I'm going to start running this. The electric bill was like minus $900. We owed like $800 on the water and sewer bill. It turns out we had no condo insurance on the whole thing.
Oh my God.
I'm freaking out about this whole thing. And then I'm like, what'd you do with my check? She goes, oh, do you want them back? She had an envelope of checks for like a year and a half.
Did she have like, did she have like a reason why she wasn't?
I have no idea. She never gave me like any reason. I'm like, you just cash the checks. Like, everything's on auto pay. You literally had to do nothing. It was like, it was just set and forget it almost, minus the insurance thing. You got to just make sure we had. But
wow, you're giving me anxiety as a lender. Like right
I was like,
now,
I cannot believe our house did not. Like, thank God that our house didn't burn down or anything like that. So it's like total mismanagement. It's like unbelievable. So now I have to handle all the stuff. And
so now do you have to tell when you decide someday that you're going to sell it, you're going to be like, and with the purchase of this comes the crown and you are the new HOA president. Welcome.
Well, so the problem is of the two other units, one is the other person, right, who just clearly does not know how to pay a bill.
Yeah.
And then the one on the first floor is an old Southie nurse who like will show up all the time with her cat Trisket in the hallway and like one earring in. And then you're like, how are you a nurse? It's like that kind of vibe. And she's like in her mid 60s and stuff. And
so you're like, this is also not you. Yeah, no, I think now the HOA president just comes with the unit. That's what you have to tell. Like,
sorry, pal.
Yeah. Welcome. Here's your crown.
Here we go.
You are the president.
Yeah, unless you want to have no insurance. I mean, the nice thing is your HOA won't get cash for 2 years.
Yeah, right. You making some interest on that, maybe? Yeah. Like that gives me. And this is exactly you're like a great example. Now I am the opposite. So my condo complex is also a small complex. It's just a few units. Our HOA has been the HOA, like the people running it for a million years. It is like. We're all on the emails for the HOA, and it would be like, can someone please investigate the pothole in section 2A? There is a pothole we need to have filled. And then you'll get the email, see the email from everybody like, we have contracted X company. They are coming out to review said pothole, and it should be filled by the end of the week.
Look at that.
Okay.
Get stuff done, huh?
It is like the most now it is. We are the youngest in our comp. So ours is in Vermont. It is like a vacation area. Almost no one who owns these units lives in them full time.
Yep.
There's like 2 people. Yes, this is condo. This is mortgage issues. So thankfully our situation, we don't have to worry about them. But it's like all people who are retired. So they have like lots of time.
Oh, that's the best. Yeah.
They have lots of time. We had a chimney inspection. The whole complex got their chimneys inspected after the winter. I'm like, I haven't inspected the chimney in my real house in how many years, let alone the condo in Vermont. No, they're awesome. But I can imagine, because it is a bunch of boomers who are running this complex, that if there were an issue, you would hear about it immediately.
Oh, I'm sure you would. Yeah. Right on top of it.
Yeah, like you have renters and they parked in the wrong spot. You're going to have a discussion with them. So like in my rental agreement, there's like a map that I like made in Canva. Like you can only park here.
Are the spots numbered?
They're not numbered.
That would be a smart idea.
We have a gravel drive, which is part of it is gravel, is very, very common in this area. So no, there's no lines or anything on it, but like there's 4 units in each little pod, and your spots go from right to left. Unit 1, Unit 2, Unit 3, Unit 4, and that's the order.
So it should be straightforward.
Yeah, it should be pretty straightforward. That doesn't mean like renters really care about that, but it should be straightforward. Now let's talk about HOA. So HOA, again, dirty word. People don't like to pay this fee. What sort of things go into an HOA fee? Like, let's really dig into that. And why do you care how much it is?
Well, because you want to make sure it's enough to cover the cost of everything, and then B, also to your point, like build reserves, because then otherwise those special assessments get like out of control. Like I had a client who had a co-op, which is a little different than a condo. It's a little bit more, I don't know how to describe those exactly.
Co-ops are weird,
but yeah, she had a super high HOA, but then she also had a lot of assessments. So like you want to make sure you're building up enough of that cash reserve. So like you have planned maintenance for like, we know the roof's going to go in 5 years. Like let's have the reserves built for that. So the nice thing is you are getting stuff for the HOA fee, right? Because you would normally, if you own the house, you'd have to plow your own driveway. You'd have to do your own landscaping, like all that stuff. Like it is covered. You don't think about it. So that is like the nice aspect of the HOA.
Yeah. And I think one of the questions to ask if you are in the market for a condo is a detailed list of exactly what amenities are included in the HOA. Do you get plowing?
Yep.
Do you also get shoveling
Yeah.
and snow blowing? Some just plow and you have to shovel out your own walkway. Some it's fully covered. Do you get landscaping? What does the landscaping mean? Is it just mowed and you're in charge of your own mulching and beds? Is the condo complex in charge of all of it? Is there common areas? What is the usage requirements of these common areas? If there's a clubhouse, do you have to pay to rent it? What does that look like? How often can you use it?
Right.
Is there a pool? Is it maintained? Is there a lifeguard? This sort of stuff.
Yeah,
So
there are
like
hours for that. Yeah.
what are the hours for it? Is there and I've seen complexes, again, Connecticut not as big, but there are complexes, especially like high-rise type complexes that have pools, full gyms, tanning salons, restaurants, like all sorts of stuff in it. Those HOA fees might be really high, but if you were paying for a pool membership, a gym membership, a tanning membership, a whatever, a game room, like
you get a lot of stuff there. Yeah.
Would it be more than this?
Right.
Maybe, and so I think it is something I think people just see the number and they're like, it's high or it's low. Now, I have also seen the opposite where I've seen HOAs. I actually had a client that I just priced one up for the other day. She's looking at a condo complex in Middletown. The HOA fee was $600 a month. And when I see that, I'm like, that's a big one around here. Because that's a big one around here.
Yeah.
And I was like, okay, let me investigate. Well, I look, the complex has no pool.
Ooh.
It has no clubhouse. It doesn't have a lot. And I'm like, what is the discrepancy here? Why is this fee so high? So I asked her, I said, hey, I think you should go back to the agent and just ask for like an inclusionary list of the HOA fee. Well, there's a big assessment in it because they were underfunded for a project and the project happened 5 years ago.
Oh, so still trying to make that up.
And they're still trying to make it up. And I was like, all right, so here's your deal. You're going to pay a lot of money for this. The HOA fee's gone up a lot. You're not actually getting a ton for it. Now, this could happen in any complex you live in. So I warn people of that. Just because the HOA is $300 today, it could be $600 next year.
Right.
You will never really know that with an HOA. But you already know that this complex mismanaged their funds.
Yeah, which is not a good start.
Not a good start. It's not
Unless you want to be on the board, which good luck with that. That's another.
Yeah, that's a whole other thing. The other thing that's interesting about condos that people don't realize too is that some complexes don't have just one HOA.
I did not realize that.
They may have multiple
That sounds terrible.
HOAs. So there is a large condo complex here in Connecticut that I won't mention, but like it's humongous. It's one of the biggest ones in the state. They have like 10 separate HOAs. So they have a master HOA that is in charge of everybody. And then each section of the condo complex was built at slightly different times and they all have their own HOA. So what gets tricky as a lender is we might be able to warrant or lend on 3 of them, but we can't lend on the other 5 or the other, 10. Like we can only do certain amounts of them, or we might only be able to lend with a Freddie Mac product, but not a Fannie Mae product because these units only fit this loan's requirements, but these units only fit this loan's requirements. So it can get really funky. So I had a borrower who was trying to buy in that she really wanted to live in this complex. And it was an amenity-filled complex. It had a golf course, a restaurant, the pool was like a resort pool. Mm-hmm. It had so many amenities. The first unit she tried to purchase was in an HOA that was terrible. It was an absolute train wreck. Each section was using their own property management company to run the HOA. Theirs was terrible property management company. It was like an absolute train wreck, and we actually would not lend on it. So we considered it non-warrantable. So it was not able to lend. She ended up falling out of contract on that one. I ended up having to call the HOA president and say, hey, just so you know, none of these units can be purchased with a normal, like a mortgage at the moment. Everybody needs cash or some sort of hard money private lending. And she was like, what are you talking about? I'm like, well, bad news for you guys. Bad news bears. Ain't nobody selling these things.
Right.
And then she went under contract for another one that honestly the HOA was glorious. We got like beautiful documentation within 24 hours, all correct. They were using a different property management company to run the HOA. They were great.
Yeah.
And so it is funky in that, like, it's not just as simple as, hey, you've got an HOA.
Right.
These people can kind of make or break the equity that you're building in this property.
Yeah. And that's something you have no control over.
You have no control over. Yeah. So it is something to consider. I always tell people when they're buying a condo to kind of contemplate it as glorified renting, right? It's renting with a little bit of equity coming back to you.
But to me, that's it's good that, I know it sounds like a real pain that the mortgage company's going through all these things, but to me, that's a good litmus test of like, well, I really want to buy into this property and spend a lot of money on something that's not run well.
Yeah.
Right. So like if they're screening that out to the point where you can't even get a mortgage because it's run so bad, like they probably just saved you a ton of headaches down the road.
And that is what I honestly tell clients all the time, because sometimes they get like mad. Like, what do you mean you're not going to lend on it? This is my new house. You
fall in love with a house. You're like, yes, I could see myself living here. And you do all that mental gymnastics. And you're like, oh.
Yeah. And I have to be like, hello, I'm Scrooge McDuck here to tell you that you fell in love with this. You qualify for it, but you ain't going to buy it. And here's why. But that's what I tell people. Like, if the bank is not cool with it, we are far more educated on this topic than you are.
Yeah.
You probably shouldn't be cool with it either.
Right.
Like, whatever's happening is not good. But yeah, so what's my like real take on all of this? So I actually love condos for a couple of different scenarios. I love condos for young first-time homebuyers who, again, would be renting otherwise.
Yeah.
This is a great alternative to rent. It really is. It's a more stable fee structure generally, right? Rent always goes up. Your HOA doesn't. Yours has been the same for a while.
10 years, yeah, pretty much.
Yeah. It doesn't always go up. It's a nice community. Again, if you're young, there is usually amenities, right? Pools, stuff like that. What's the downside as a young person? You cannot be throwing parties in these things. You will get the HOA police called on you quickly. HOA police, by the way, guys, isn't real. It's usually just some crinky other unit owner who has dubbed themselves the HOA police. There's one in every complex.
Absolutely.
Yeah. Who's like, oh, your steps are not the right color. And yeah, okay, cool, whatever. But young people, I think, is really great. I also love it for older retirees. Mm-hmm. So that is my other favorite people. And truthfully, a lot of 55 and older communities are condos, HOAs.
Well, that's such a hot, like, real estate item. I feel like, you know, my job, you get like we want to live in this community. Like, it's because they want that community feel, but they don't want to take care of stuff, but they still want their own space.
Yep, exactly. And it's not a convalescent home. It's not a retirement community. No. Age 55 and older. And I think the same thing in Connecticut, there's not as many of them. Like if you go down to Florida,
that's all they have.
Every other house is a 55 and older retirement community, mostly on golf courses with huge clubhouses, pools, right?
Yeah.
I always tell people it's Club Med for retirees. That's what those 55 and older, they don't ever leave. Some of them have grocery stores in them. Like those people don't ever leave there.
It's like college with a lot of prunes.
Correct. College with a lot of prunes. Unless you live in the villages, and then it's college. That's a whole other episode. You guys should all Google the villages in Florida.
Yeah.
In Connecticut, they're fewer and further between. They're more about maintenance than anything else. Maybe less about community. Some of them don't have pools. But it's about maintenance. Somebody's taking care of it. Somebody's mowing the lawn.
But that's the thing too. If you're older or on the younger side, like, do you really want to spend all your time mowing lawns and stuff like that? You just want to be like, look, I just want to go to work. I want to come back and I want to live. Or I want to have, my space.
Correct. I also think that condos are really great, like first toe dip into home ownership, because again, they tend to be less expensive. Now, you are generally not building equity at the same pace as you are a single family home.
Yeah.
It's a little bit slower, but I always tell people, if you could live in it for 5 years, sell it and get out of it with a little bit of equity, it's still better than renting.
Yeah, the other thing is, like, let's say you have a fixer-upper condo, like, it's a much cleaner, easier fixer-upper because you're probably just redoing a kitchen, a bathroom, and maybe a bedroom. So it's like a much smaller lift if you're like, all right, let's say I want to push some equity that way. Like, you can do that in a much smaller scale with a
than a house.
Than with a house, for sure.
Exactly. Now, who do I not love condos for? Okay.
Families.
Truthfully, families, it's really hard if you have a lot of kids. Like one kid, fine, not a big deal. Very rarely do you find condos with more than 3 bedrooms. Those are very rare. 3 bedrooms is usually where they max out. Most condos are actually 2 bedrooms. That's the most common condo
townhouse, right? But that's about it.
Yep. They're usually 2 to 3 bedrooms. It can be hard. A lot of them, you are generally sharing either a wall or a ceiling or a floor with another person. Or both. If you don't have kids yet, you have no idea how much noise they can make. You have no clue. My son, every single morning as he like stomps down the stairs, I'm like, oh my God, why?
I never got why my dad yelled at me for slamming the door. Now I know.
Now you know, because you're overstimulated all the time. So you're like, oh God.
I'm slamming the door.
Yeah. No, I think
Yeah.
for families, it can be really hard. It can also be hard, and this is something people don't think about. Like, say little Jimmy is in your kid's class and they don't get along well, and then you find out that little Jimmy lives in the complex with you.
Yeah.
It can be hard to get away from people that you don't want to be near.
Right.
So that is a little bit tough. And there's generally not yard space for kids to run around and things like that. Does it work for some people? Yes, absolutely. But it is not my first choice for families. I love it. And it is, I think I said it actually in the last episode, if I could go back to my 20s, that's my biggest regret. When I was 25 and I started renting apartments until I was almost 30, if I had bought a condo when I was 25 and I rented it for those 5 years, my life it would be vastly different than it is now.
Same here. Absolutely same here. Yeah. It would have been a really smart move. Like, and I'd be like, just get a renter to come with you because you're already renting with a roommate anyway.
Yeah. Well, so I'm finding that very common these days. I get these young 20-year-olds that either mom and dad buy it, thinking the same thing. We're already going to pay rent. We might as well get a little bit of it back. Or the young adult is going to buy it. They already have a roommate. Roommate's going to move in. They're going to split the mortgage payment.
Now, will that factor in the mortgage? Let's say I buy the condo. I can't afford it on my own, but I'm going to say, look, we got a renter coming in. They don't care.
That's a great question. So there are a few programs that allow you something called border income, which is that it's like a single family. But mortgage companies don't really love that situation. So we don't usually include that as part of your income to qualify. If you buy a multifamily, yes, we can do that. Then, so you buy a 2-unit, right? 3-unit.
Yeah.
But you buy a 2-unit, you can use the rent towards the second unit, towards your income for the mortgage payment. But inside your house or condo, it's a little bit trickier. Again, a few programs allow it, but it's not super common.
Got it. Okay. Good
But
enough.
you can contemplate it, right? Yeah. Like, hey, my roommate's going to pay it. And I always feel like that's great too, is I've had, again, some borrowers that's what they've done. Roommate A is going to move in. Well, they live in it for 3 or 4 years. Roommate moves out, boyfriend, fiance, girlfriend, fiance moves in. Now you guys live in it together. It's now like a little nest egg for you. You get married, you sell it, you use those proceeds to buy a bigger home. It's a great plan.
Yeah. It's a good step up.
Yeah, it's a great plan. So I do think that they fit the bill for some people. I always just like to caution people that it's just not as simple as people want it to be.
Yeah, well, that makes sense, especially after everything you said. So
yeah, it's a little more complicated. If you have questions about condos, I would love to answer them. I have lots of fun facts about them. I have lots of information.
I don't know, they're fun, but yeah, they're facts for sure.
They're facts. They're facts. And again, I think people here, I put HOA in the same dirty word category as PMI, private mortgage insurance. People hear it and go, I don't want to pay an HOA. And I'm like, well, you're going to essentially pay your own personal HOA in your single family home.
Correct. Yeah.
Yeah, you got to have all that money anyway. So they're not the worst thing. You just need to be educated on them.
Got it. Cool. Well, thanks for listening. Please like and subscribe and tell your friends.
Yeah, awesome. Thanks.
See you next time.